So that's a very important thing. When you've got all three, when you've got fair accounting, when you've got fair securities treatment or trading treatment, and when you've got fair banking treatment, then you'll see mega corporations that will think, okay, this is a reasonable thing to do. People oftentimes they fixate, they think the lesson of Satoshi is don't trust any counterparty. I don't think that's the lesson of Satoshi. I think the lesson of Satoshi is if you can store your money for 1,000 years without a counterparty, you've created perfect money, right? I think, or perfect digital capital. I think that's the first lesson. And I think the second lesson is if you can move the big without a trusted intermediary, now you've got an open global network. And what it really means is that 300 million companies can settle with each other. And that means that 50,000 banks can settle with each other. And so this becomes a settlement network. Is not that Bitcoin allows you to avoid depending on a custodian. The deeper idea is Bitcoin gives you a competitive market, a global competitive market for custody. And you have the option to move $10 billion in 1 hour anywhere in the world, hundreds of millions of potential custodians. And so that creates a competitive market, a free global capital market, and an arbitrage between every type of custody and every country and every form of possible custodian. As a last resort, you can take self-custody. And you don't have the ability to take self-custody of $10 billion of Apple stock as a last resort. And you don't have the ability to take self-custody of $10 billion worth of real estate as a last resort. And you don't have the ability to take self-custody of $10 billion of gold as a last resort. And the last resort is useful, but really a more practical thing you find in life, and every corporation finds this out. It's like when you need to buy electricity or when you need to buy oil, yelling at General Electric or yelling at Exxon that if they don't give you a better deal, you'll just drill for the oil yourself. That's not credible, right? The salesperson looks at you and they laugh at you. Yeah, sure. You're going to start your own petroleum company, drill for your own oil. I bet you will. A much better negotiating strategy to say to the gas station, if you don't sell me gasoline at a reasonable price, I will go across the street to your competitor, or I will do business with Chevron instead of Exxon. And so generally, if you want to get treated fairly, any business school would say to you, okay, you create a competitive auction and you find the 2 or 3 specialists.
Data from market intelligence firm KUCOIN reveals that only 7.6% of Bitcoin investors were still in a position of loss when the price was at $67,381 on October 23, subsequently accounting for 92.4% of the supply and profit. The majority of coins were purchased at the $55,000 level. The percentage supply in profit and loss evaluates the sum of unspent transaction outputs, UTXO, that are in profit or not by comparing the price when they were last moved and the current price. The chart above shows that if Bitcoin remains above $55,000, more than 90% of investors will remain in profit. A high number of holders in profit is often seen as a sign of an overheated market, which typically precedes or coincides with price corrections. As a result of this on-chain signal, Bitcoin's price may see deeper pullbacks over the coming days. Open interest, OI, on Bitcoin derivatives hit a new record high on October 21 as BTC came close to overcoming the resistance at the psychological $70,000 level. Bitcoin open interest exceeds $40 billion for the first time, noted futures trading and information platform CoinGlass in an October 21 post on X. Open interest is the value or number of outstanding futures contracts that have yet to expire. It measures the amount of money invested in Bitcoin derivatives at any given time, with higher OI indicating potentially more leverage and volatility in the market. Additionally, Bitcoin CME futures open interest also hit an all-time high of 179,550 BTC, worth approximately $12.1 billion at the time.
When you're the restaurant and you want to lever Coca-Cola for a better deal on Coke and Diet Coke, you don't threaten to create your own beverage company or do it yourself and create Mikey Cola. What you do is you bring in you have the Pepsi sales guy, you have the Pepsi hat sitting on the table. You say, I just met with the dude from Pepsi and he offered me a better deal. And the Coke sales guy goes back to the district manager and says, Pepsi's in there talking to them, so I think we better give them a better deal. And of course, there's only Coke and Pepsi. When there's one, you're in deep trouble. But Satoshi gave us 10,000. There's 50,000 banks, right? If you get like 100 custodians competing with each other, you're going to have a pretty good market and a pretty fair market. And I think that's what's going on here. The big institutional holders like MicroStrategy or the big ETFs, yeah, they're going to use regulated custodians. They're going to put pressure on them. By the way, there's the crypto anarchist and there's the libertarian view, not your keys, not your coin. And it's an important mantra. But barking at Coinbase and telling them, or barking at some exchange to be better on Twitter doesn't work, right? I'll tell you what works. When BlackRock has $20 billion of assets, and then the guy that runs the BlackRock ETF goes to talk with Coinbase.
Data from Cointelegraph Markets Pro and TradingView shows that Bitcoin's recent rise above $69,000 saw its daily RSI reach overbought conditions at 70 on October 20. This was followed by a sharp drop towards $66,000, as shown on the chart below. The Crypto Fear and Greed Index is elevated at 72, or greed conditions, which implies a high chance of a price correction across the crypto market as a whole. The last time this index was above 70 was in March, just before BTC dropped down from its all-time high of around $73,835 toward $56,500 on May 1. Similar conditions were witnessed at the height of the 2021 bull cycle and in 2019, followed by similar pullbacks in BTC price.
Hey Nexus crew, if you're ready to unlock the secrets of the crypto market and ride the next wave of Bitcoin, altcoins, and meme coins, then you're in the right place. We're diving deep into the trends that are shaping the future of finance. And trust me, you don't want to miss what's coming next. Hit that subscribe button to join the Dynamic Nexus Crypto community, where we break down the hype, decode the data, and give you the tools to thrive in this fast-paced crypto world. Turn on notifications so you're always the first to catch our latest insights, market predictions, and exclusive crypto strategies. This is your front row seat to the revolution. Let's conquer the market together, one block at a time. Welcome to the future. Welcome to Dynamic Nexus Crypto.